So this is there'll be 3 slides. This is what I call the sum of the parts, and I have them categorized into. I have a much longer time horizon than our current shareholders. I'm looking at this at something that plays itself out over the next 3 to 5 years, and each one of these categories, I think there's $100 million plus opportunity in the technology group. The other bet segment, and DPW financial group. And so I've categorized them this way on purpose because I think that combined all of them have that kind of opportunity. I'm going to let Phil talk about some important milestones. I'll chime in a little bit here. Excuse me, Will. Apologize.
So as we ended 2018, we were really looking towards reduction of our debt. Again, I think that's one of the biggest constraints on our share price right now. Is the investment community is concerned about our ability to pay it down, candidly. So we have targeted about a $15 million reduction over 2019, of which we've reduced it by about $2 million so far this year. We've got preliminary agreements for another $2 million reduction, and I don't see any way why we can't get that debt obligation reduced this year. We'll still obviously use some debt at some of the subsidiaries. They have lower cost capital because their businesses have been around so long. Enertech's been around for 27 years,
right?
And it's just a different cost of capital over in Israel, which goes to the second point, the operational lines of credit. Obviously, the price of Bitcoin has it's had an adverse relationship on the company's stock price over 2018 as the price of Bitcoin decreased. We're still in that business. We think there's a lot of value in that business. But as Darren and Marty pointed out, we have the ability with Digital Farms, Inc. to move into the business when it's opportunistic. MTIX International's performance, the company has unmet demand. There's no other way to describe it. We think we'll deliver 6 to 8 machines this year, but again, that's dependent upon our ability to raise significant equity as opposed to debt capital this year.
The reduction of debt to match our long-term assets is a really critical conversation.
Which also has a big impact on our overall profitability.
Right.
If you look at the company's profitability or net loss for 2018 for the 9 months that have been reported, half of our loss is attributed to non-cash charges or cash-based interest expense.
Yeah, so about half of our loss is because of that short-term debt, and the capital structure is a little messed up. You got a price of DPW holdings at under a $10 million, give or take, a $10 million market cap. You got $60 million of assets, and you got short-term debt that we're paid down. As Will mentioned, we paid down about $2 million of it so far this year. It's really become a nuisance for us in terms of matching our lenders to our long-tailed, long-term assets. That probably will lead to Alton Company making additional investments. We've made some. Alton Company's made some recent investments. Don't go too far. Alton Company's made some recent investments, and we tried to be patient to telegraph to the market by paying above market prices of 12 cents to demonstrate that we're committed. But at the pace we're going, we'll continue to make additional investment, and therefore reducing the debt, but of course increasing Alton Company's ownership of DPW Holdings. As I've said before, if you go on a look-through basis, I can actually buy assets cheaper by buying DPW. So the very assets that I own part of at Alton Company are cheaper to buy them through DPW. So the market's got it wrong, in my opinion. I'm wrong short-term. I'll be right long-term, in my opinion. The risk factors of access to capital will drive this $60 million in sales. I'm going to skip to the bottom and let him talk about delivery of machines. Acquisitions in the financial space. We already have several things going on in the DPW financial group sector. It won't be dilutive to DPW shareholders, in our opinion. So we are looking long term to reduce the need for a DPW to issue equity and allow the subsidiaries themselves to have individual financing. Case in point, recently David and Amos got financing from Microphase directly at the subsidiary level. Amos has 2 bank lines with 2 Israeli banks with really great cost of capital. Amos is in under 4%. Is that right? 3.5. So there is a story of how we're going to be able to finance the subsidiaries and let the parent allow a little breathing room on the equity side of it. Even Digital Farms will finance outside of our balance sheet to allow us to get our equity value there, but have direct financing directly at Digital Farms. This number is achievable. It looks a little strange relative to a market cap of 10 million and sales potentially of 60 for 19. I think the number accelerates through 20, 21, 22, and 23, but we're not going to forecast out that far because clearly we've had some challenges on the equity side. I'll let Will talk about the delivery of the machines, and we'll wrap it up with questions.
So historically, there's really been a couple of difficulties on the delivery of the machines. First, there's a learning curve, and with that learning curve goes along with it a higher price for the initial machines. So whereas we think we're going to get the cost of the machines down to, call it 1.6, 1.5 million, those first 3-4 machines really are closer to 2.3 to 2.4 million. That, of course, creates a challenge on the financing side, but also, even if we brought in the financing that we want to today in order to deliver on the 200 and plus machines that Phil was speaking about earlier, we still need to do some engineering work that we want to do in order to make sure that the gross margins at the DPW level, DPW Holdings and Coolassist, is in line with what we've historically projected. We're looking at 20 to 25% margins on that revenue source, but if we can control the costs, we can get those up even higher. And then, of course, we talk about a $50 million purchase order on 25 machines. As things ramp up, there's demand out there for far more than 25 machines over the next year, 2 years, 3 years. I think Phil would like to get 500 machines out there if he could. That obviously would push our infrastructure a little too far.
Yeah, exactly. So important takeaways I think you take away from this is that we're going to be opportunistic in what we sell. The restaurant group probably gets spun out this year, early next year. Digital Farms is doing a deal. We're excited about that business. We're still in Bitcoin. Amos is growing the defense business. Enertech will turn profitable this year. Microphase, we think, turns profitable. Power Plus, the new brand in terms of distributors there. Alzamend, we're going to have an investment in Alzamend. We're trying to make the story simpler. This is the first investor day we've ever had. I'm super grateful you guys were able to sit through 3 hours of us moaning and groaning up here. Alton Company, through Philu Ventures and my family fund, and Will and I are the largest outside shareholders. I've said it 100 times, and hopefully in the reduced tweeting I do now and in public filings, we're going to buy more. Let that not be a secret to anybody when they wake up and say, why did Alt buy it down here so cheap? Maybe it's not, but I think it is. And with that, do we have any questions online?
You have a couple. One was back for Coolassist, and it was what happened to the backlog. It wasn't spoken about when the Cleveland Financial slide was shown.
Oh, we still have an extensive backlog at Coolassist, at Microphase. Amos, can you speak to the backlog at all?
Yeah, we got, I would say, about
Right. So you look at we've been hovering around the 70 million with MTIX in there. That's plus or minus. I think that one of our top priorities to pay down debt is to push through that backlog. I think people forget we have receivables of, what are our receivables like right now? Yes, we have receivables of, I think, north of 7 million. So one of the ways we'll reduce debt is to capture that receivable out, lengthen some of our borrowing time, and push hard on getting that backlog delivered. There's really go ahead, Amos.
Yeah, that does not mean that we're not going to be continuous to ship product and continue to fulfill the backlog.
Yeah.
It's not that we are shipping product and the backlog is reduced. We continue to get more orders.
Right.
We maintain a healthy backlog.
Right, so you maintain a healthy backlog by new orders. I think it's one thing that's hard to describe is that some of the work we do on the defense side is top secret. I don't have full secret clearance. Almost does in some cases. And I got to be very specific. But the Air Force contract for some product, they don't allow us to recognize the whole contract till we get ongoing yearly orders. But it's a really long contract. The new destroyer contract with Gresham is 10 years of recognizing that revenue. So the defense business, if you look at it, has this very long curve of backlog that will continue on, and that's why, depending on where the defense business ends up, it's a very valuable asset managed properly. Any other questions?
Where does our debt currently stand?
We reduced $2 million of our debt in the last month and a half. I think we stand somewhere.
$2 million paper.
Right, so we'll probably end. Well, the debt will end up down around 11 million, and going down. We're using Bitcoin and cash and some convertibles to pay down debt. And we have no plan. I feel like a lawyer standing behind me. We have no plans to take on any other short-term debt. I think Will have a tough time letting me sign anything that is not further out than a year to 3 years. The subsidiaries are borrowing money at considerably cheaper than the parent, and therefore we need to right-size what our debt structure looks like. Any other questions?
Yeah. What is the current public float outstanding?
The last report I think is 111 million, give or take. Anybody in house have any questions here? David?
Yeah, about MTIX. With regard to the funding there, one of the ideas I had or was wondering about was, is there any way that we can, I mean, if the demand is so great, which I believe it is, can we have a short-term time where we say to these big customers, hey, you pay for our machine for us, we'll give you a huge discount, we'll arrange something, but they'll help to capitalize these first few machines and get us off the ground. I don't see why we can't do something like that.
So, Bill's rolling his eyes. Sounds like when you talk to Bill. So, let me say that I've been holding on tight to the tolling model. It's no secret, I think, that we're in advanced discussions with a very large private equity firm and financing firm to finance machines. If we're not able to secure like a $30 million plus line of credit to build out machines and long-term equity for MTIX, then I could see that happening. But we're really close to getting a substantial line of credit. It's really important to understand the holding company structure is going to kick in, and you're going to see financing announcements at the subsidiary levels or the investment levels that don't dilute the parent. And it'll start to operate as these autonomous businesses that are a little disconnected from the parent a little bit, operating on their own with their own financing. But if we couldn't get, have any comment there? If we couldn't get that kind of financing, we'd probably have to go to a model where they pay up a little bit more for the machine.
Yeah, I think we would certainly consider it, but keep in mind the whole point of the first couple of machines was to prove out the model.
Right.
Was to show that you had consumers that were willing to pay a per meter charge. So I think we're reluctant to do that today.
What do you, Phil? You going to add something to that?
The other piece that often goes unlooked or ununderstood is the build out of infrastructure. It's not simply building machines. As those first two machines building the internal infrastructure to service the machine.
Right.
So this is the best plan and the best use of capital to both move forward with machine building and infrastructure building.
If you ever been to a textile plant, when these machines are installed, we have to keep them running, and everyone's fabric's a little different. I'll give you a lesson I've gotten recently, and that is, it's not as simple as everyone makes it. Get wool from Australia. The nitrogen level in that wool from what they eat in Australia is different than Ireland. So all these fabrics have their own different algorithm and their own, what do you call it? Whatever Bill calls alchemy. They have their own little chemistry in terms of how they're serviced. And so infrastructure is going to be really important for that rollout too, not just money. But it'll get critical mass eventually. Will and I have been through it. We had a solution in the OR for patient safety, and I thought everyone would adopt it right away. We did the first sale, got it done in 6 months, got it through the Mayo Clinic, got it through Brigham and Women's at Harvard, and then no orders. No orders for a long time. Then all of a sudden we got 1, 2, 3, then 20, and now it's the standard of care. That took 9 years. What was supposed to be $2 million in 2 years was $18 million in 9 years. So, there you go. Any other questions internally? Well, a lot of the faces here I recognize. I appreciate you guys being here. With that in mind, any other questions online, Joe?
Do you see a feasible path that truly does not include an RS, big concern for long term?
I don't know why anybody in their right mind thinks I want to reverse the stock. Does it make any sense that I would want to? I'm the largest shareholder with Will. Why would I want to reverse it? The market cap is broke, yet the assets are there and growing. I think the only path to that is by July 4th, a much improved stock price. We're not on the NASDAQ, so we don't need $1, but we do need a significant improvement in the price of the stock. We're going to try to avoid it at all costs. We had this investor day to outline the opportunities there, but that the market will determine what we have to do there. Believe it or not, other than a spike up and down in Bitcoin and a declined price, we think we've done everything we said we were going to do. We've outlined this a couple years ago, and we're still on the same path we were to grow the business. We want to grow the top line sales to 100 million, and then we want to have a bunch of opportunities to shots on goal. We still want to be moving towards profitability at the end of 2019. And, if the market continues to undervalue the company, then they're going to continue to sell it to Alton Company, and then eventually we'll be the biggest shareholder. And if the market wants to take it down that path, it will. So that'll be up to the market. We're trying to do everything we can to deliver on what we said we were going to do. We think there's a lot of value here. We've added to the team internally at the parent company. Darren's doing some fun stuff. Phil's doing some great stuff. Stefan, the whole team is trying as hard as they can to deliver, including trying to stay awake during this presentation. So, anyways, with that in mind, thanks everybody. Take care. Bye-bye.